You've probably heard about global oil politics. But what if I told you there's a quiet, seismic shift happening in Africa, one that could reshape who controls the energy game and affect you, your country, your future? Today we'll explore how Africa is being drawn into a new chapter of the oil story by China, not just as a supplier, but as a strategist. You'll learn what is happening, why it matters, and how you can position yourself, even if you're halfway around the world. Stay with me because by the end you won't just understand the shift, you'll see where the opportunity lies. Let's get started. Imagine a vast cloak, slowly lowered over a room full of lights. The lights dim and you don't quite notice until everything is half dark. That cloak is the subtle threat in the oil world right now. For decades, many industrialized nations and corporations assumed that the old rules held: extract the oil, transport it, sell it, maintain supply chains, and governments more or less ensured stability. But that assumption is eroding. Africa has long been seen as a frontier for oil vast reserves, growing demand, low cost of extraction. And yet, many regions remain vulnerable: political instability, infrastructure deficits, weak governance. Now imagine that cloak dropping and the lights going dim in that room. Supply chains wobble, prices spike, alliances shift. That's what you're going to watch unfold. Because when major players change their strategy, it doesn't just affect oil companies, it changes jobs, mortgages, national budgets, trade balances. And often, the change arrives before the news headlines fully register. Here's what you need to see. The threat isn't always a blackout. Sometimes it's a slow fade, a shift of power, a game of patience. And if you don't spot it, you can get caught in the dark. But there is hope, there is something you can do. We'll get to that soon. But first, how have the rules changed? Let's trace the old model. Country A drills, country B buys. Pipeline here, tanker there. Everybody more or less knows the route. But the story is shifting, and the old advice, just hold oil reserves, maintain supply, no longer works the same way. Here's what's happening. China is altering its approach in Africa. Historically, African oil made up a large portion of China's imports. But in recent years, that share has dropped significantly from about 1/3 to around 10%. Why? Because China is investing deeper into infrastructure, into partnerships, into strategic ties, not just buying oil barrels. It's shifting from importer to player on the ground. At the same time, many African oil exploration licenses held by Chinese firms are nearing expiry. One expert warns, without fresh assets, China's foothold could shrink. Who wins when this shift plays out? Firms and nations that read the new map. Who loses? Those clinging to the old path of sitting back and waiting. For you, this means, if you're invested, employed, or simply living in an economy tied to global oil markets, you can't rely on the same assumptions. The rules have changed. And here's the kicker. China's moves in Africa aren't just about oil. They're about influence, power, infrastructure, alliances. Which means you have to look beyond barrels and pipelines. Coming up, what you can do to protect yourself in this new landscape. Protection isn't about burying your head. It's about being alert. First, tangible action. Diversify your view of risk. Oil price risk is no longer just about supply interruption. It's about geopolitical strategy. Here's how you protect. Monitor your exposure. If you're in a company, a job, or a pension fund linked to oil or energy sectors, ask, how exposed is it to Africa-China shifts? Are we dependent on old routes or new ones? Stay flexible. Even governments are renegotiating pipelines, licenses, royalties. As we saw, Africa's oil landscape is under pressure. Infrastructure delays, license expiry, shifting import shares. Educate yourself. Get savvy about where oil comes from, who controls the supply chain, how infrastructure shapes power, e.g. Chinese military diplomacy in Africa is growing, meaning protection isn't just economic, it's strategic. Have a buffer. If you're financially tied to energy markets, investments, pension, consider moves to manage volatility. Alternative holdings, savings, assets less tied to oil cycle swings. Protection is boring, but essential. It keeps you steady when the storm hits. And that storm isn't hypothetical, it's already gathering. Yet protection alone isn't enough. Because once you're safe, you can start to grow. Let's zoom into a real-world example. In recent years, China's imports of African oil shrank, but its investments into African LNG, liquefied natural gas, exploded. In the case of Mozambique, China's state firm holds a 20% share in a $30 billion United States dollars LNG project. Here's the takeaway. By shifting early to LNG, China isn't just reacting, it's repositioning for the future. For you, this means those who pivot early can turn a risk into a stepping stone. And now we move to growth. Growth isn't reckless, it's informed. Once you've taken protective steps, you can look to build adaptive income or value streams that ride the new wave rather than get crushed by it. Here's how. Look for structural shifts. For example, infrastructure, pipelines, facilities, logistics. China is stepping in. Those providing services, technology, logistics around those may benefit. Identify alternative energy links as oil dynamics change. Don't just watch crude. Look to natural gas LNG, renewable links, adjacency to raw materials. In Africa, Chinese firms are stepping into these. Skills plus location arbitrage. If you're in business, career, or investing, ask yourself, where am I uniquely positioned to serve markets evolving under these new conditions? Maybe it's servicing infrastructure in Africa, maybe it's supply chain analytics, maybe it's locating in emerging nodes. Be ready for volatility. Growth in transformed sectors comes with risk, but risk armed with insight becomes opportunity. When you grow this way, you're no longer just reacting to the shift, you're riding ahead of it. Here's a shorter narrative. The China National Petroleum Corporation, CNPC, and other Chinese firms face expiring exploration licenses in Africa. Without proactive moves, they risk shrinking. But they didn't just wait. They pivoted into mega projects and infrastructure, positioning for long-term value rather than short-term extraction. For you, the story shows the payoff of agile growth, spotting that the old asset, just oil barrels, was declining, and investing where new value was forming, infrastructure, partnerships, logistics. Now, the final crucial piece, reading the signals. To stay ahead, you must see the signs before most do. What are they in this scenario? Licenses and contracts nearing expiry. Assets in Africa held by foreign firms are not eternal. When licenses expire without renewal, the balance tilts. We saw this with China's oil ambitions in Africa. Shift in import sources. If a major buyer like China is reducing imports from one region and raising investments in another, the supply map changes. For example, China's African oil import share dropping and its LNG focus rising. Infrastructure buildup. Pipelines, ports, refineries, and regions previously underserved signal strategic moves. Even if oil itself isn't flowing yet, the architecture is being laid. Military or diplomatic engagement. When major military diplomacy or base building shows up in a region, it often signals deeper strategic intent beyond economics. China's military diplomacy in Africa has grown. Policy and regulatory shifts. Governments in African nations are increasingly renegotiating terms, revising contracts, seeking better deals. Tracking those changes tells you where advantage is shifting. When you read these correctly, you're not surprised by change, you anticipate it. You don't react once the storm hits, you've already adjusted your sails. And then you're ready for the final lift. Here's the resolution. The world you knew where you could assume oil flowed, contracts held, routes were stable is evolving. And if you don't evolve with it, you'll be left watching others adapt while you scramble. You've learned 3 steps: protect, due diligence, diversification, awareness. Grow. Look for structural shifts, alternative flows, emerging value. Read signals, licenses, imports, infrastructure, diplomacy, regulation. Now you hold the key, the capacity to turn change into advantage. To move from being subject to global shifts, to being a participant, even a leader. Your vantage point. Imagine sitting on the edge of a large, shifting board game. If you stay still, pieces move past you. But if you move wisely, you can place yourself where the next move lands. That's what you're capable of. In Africa, China is rewriting the playbook for oil and energy. It doesn't mean one side wins and another loses in a simplistic sense. It means the board is being reset. And you're either repositioning or being repositioned. So ask yourself, what is my role in this new board? Where do I sit now and where should I move? Because the next wave is coming. The next value chain is forming. And you want to be part of it, not buried beneath it. This is MacroScope. See the signals. Make the moves.